Hello students, in today's class I'm going to introduce you to the concepts of year-end adjustments by looking at number one, the meaning and types of year-end adjustments. Number two, the concepts of accruals and prepayments. Number three, the accounting entries for accruals and prepayments. Then lastly, we'll look at one or two practice questions. All right. Now, let's start with year-end adjustment. What do we mean by year-end adjustment? These are corrections made in the statement of financial position and in the statement of profit or loss. All right. So before we go further, let me give you a structure of the accounting process. All right, look at the structure of accounting process. You will start your recording with source documents. Okay, the recording of transactions starts with source documents to capture the transactions. It's as an evidence that transactions occur. All right, so examples of source documents, like there are receipts, invoices, and so on. Okay, from the source document you will record into the subsidiary books. Okay, into the subsidiary books. What are the examples of subsidiary books? They are the day books, the cash books, the bill books, okay, and the proper journal, all right, or what we call the journal proper. All right, so the day books, we have the sales day books, purchases day books, and so on. So once you have recorded into the subsidiary books, you will post into the ledger. So transferring information from the subsidiary books into the ledger is called posting. Take note of that, write it down. When you transfer, that is the transfer of information from the subsidiary books into the ledgers, is called posting. Okay, once you post into the ledgers using the concept of double entry, that is the recording of the debits and the credit side, the corresponding credit side of a transaction. Now, for you to ascertain whether the accuracy of postings, the arithmetical accuracy of postings, you will prepare a trial balance, a statement called a trial balance. Okay, so from your trial balance, it will serve as a working paper. The trial balance serves as a working paper for the preparation of the final accounts. But before you prepare your final accounts, between this trial balance and the final account, you must carry out what we call the year-end adjustments. Okay, between this trial balance is like a working paper for the final account. And what are the examples of final accounts? Okay, we'll be looking at statement of profit or loss account and statement of financial position, statement of profit or loss for the year ended, and statement of financial position, okay, as at the year. Okay, now before, like I said, the trial balance serves as a working paper for the final account. But before you can prepare the final account, you will carry out what we call the year-end adjustments. Why? Because we must make sure that the actual income, write it down, to make sure that the actual income, okay, is matched against the actual expenses. Actual income is matched against the actual expenses. Okay, what I mean is that for example, our accounting year is 2005. Let's say 2015. the actual income for 2015 must be matched against the actual income that relates, actual expenses that relates to 2015. The income that belongs to 2016 must be subtracted. Then to have the actual income, students should take note of that. That is why we normally carry out this year-end adjustments. Hope you understand. The reasons for these year-end adjustments, all right, is to ensure that the actual income is matched against the actual expenses. All right, so I've repeated that. Write it down. The reasons for the year-end adjustment is to ensure that actual income is matched against the actual expenses. Okay, class? Now, what is year-end adjustments? That's the question. They are corrections. These are corrections made in the statement of financial position and statement of profit or loss. All right? That is year-end adjustments. They are corrections. They are simply corrections. Okay? Write it down. They are corrections. Pause the video and write it down. Made in the statement of financial position and in the statement of profit or loss. Okay? Now, we have types of year-end adjustment, types of corrections to be made. Number one, we have what we call the accruals and prepayments. Number two, bad debts and provisions for bad doubtful debts. Provisions for doubtful debts. Okay? Provision for doubtful debts. All right? So we are going to discuss them one after the other. Then we have discounts and provisions and its provisions, then depreciation and provisions. Okay, so we are going to discuss this. Okay, but for today's class we are going to concentrate on one, that is accruals and prepayments. So let's get started. So let's start with accruals. Okay, in a simple language, accruals simply means owing or outstanding, what you are owing, all right, or what is outstanding expenses. Owing, simply write owing. That's what we mean by accruals. So accruals could be expenses or income. So you could owe, the business could owe expenses or income. All right. The customers may owe us income. So let's look at what is accrued expenses. Now, write it down. Accrued expenses are expenses incurred due to service enjoyed, but yet to be paid for. Hope you understand that. When you enjoy a service, that is unpaid expenses. It also means expenses that is unpaid. The customers, we have not paid our supplier. That is accrued expenses. For example, the business may be owing for rents, maybe owing for electricity. Okay, maybe owing for electricity, rates, rent, telephone, but the business must have enjoyed the electricity but yet to be paid for. That is what we call accrued expenses. Hope you understand that. Now, the accounting entries goes thus. When you have expenses account, you will debit the cash paid and credit your cash accounts. You debit the cash paid. This is debit and this is credit. Then owing for the current. Then we have owing brought forward from the previous year. This is what you are owing from the previous year is brought to this year. Okay, so this is what we are owing in the current year. Then this, the balancing figure goes to the statement of profit or loss account. Then this is the owing carried down, brought forward. Okay, or carried down, since we have used carried down here. All right, class. So that's the format. Then we also have accruals, that's income, accrued income. These are income that are due during the trading process but yet to be received from the accounting year. For the current, it should be current accounting year. They are due. All right, like our customers now, supposing we are to collect money from them, but they said for now we don't have money till next year. That is accrued income. Okay, if the business has sold goods to the customers but the customer are yet to pay for those goods, so that they will be referred to as accrued income. Accrued income. So when you have accrued income account, we have balance brought forward, okay, from the previous year. Then this is the cash that was actually received. You must have debited the cash account. You credit the income account. All right. Then this is the balance yet to be received. We actually received this. This is what is yet to be received in the current year, that belongs to the current year, but we didn't receive it. So we now take it to the next year. Then we have our balancing figure. So this one is the balancing figure. It will go into the statement of profits or loss accounts. All right, class. So let's try a practice question. So look at this practice question 1. Rent expenses paid for the year 2020 for the year 20,000 naira. Rent expenses owing at 31st December 2013 is 5,000. Okay, write it down. Rent expenses owing at 31st December 2014, that's the current year. This is the previous year, is 2,500 naira. You are required to prepare the rent accounts. Number 2, the statement of profit or loss account. Then the statement of financial position as at 31st December 2014. All right. So let's get started. Let's look at this. Then see, you open a rent account. All right. The rent expenses account. You open the statements of profit or loss for the year 2014. Then we have the statement of financial position, extracts. Is an extract. How will it appear in the statement of profit or loss, and how will it appear in the statement of financial position? Okay, class. Now let's look at the question once more. We have the rent expenses paid. From the format, look at the format. Any expenses paid during the year will be what? Debited. All right, will be debited. Then any owing from the previous year will be credited. Okay. Then any owing during the year will be debited. Then the balancing figure goes to the statement of profit or loss. All right. So let's get started. Then rent expenses paid for the year is 20,000. Then you have your cash. You have to debit the rent accounts with how much? 20,000. Okay. Then the expenses owing as at 31st December 2013. So we have our balance brought forward. How much? That is 5,000. All right. Then we have our balance. That is the rent expenses owing for 31st December. Okay. We have balance carry forward for 2014. Okay. Then the balancing figure goes to the statement of profit or loss account. So take, all right. So this will give you 22,500. 22,500. Then if you subtract, let us subtract 22. You subtract 5,000 from 22,500. So what do you have? 0, 0, 5. All right, this will give you 17,500. So we have 17,500. all right, so this is balance carry forward. Then you extend this a bit, we have balance brought forward, which is 2,500. So this is statement of profit and loss. Then you come to your statement of profit and loss under expenses, under the expenses. All right, so we have rent for the year 2014. The actual rent is 17,500. Okay, then in the state, how will it appear in the statement of profit? So under the subheading, which is current liabilities, is a current liabilities. Okay, so we have accrued rents. How much? What is our accrued rent? 2,500. That's what we are owing. So don't forget, this statement is an extract. So this is how it will appear in the statements of financial position for 2014. Okay. All right, so now let's look at prepayment. Okay, before we look at prepayment, let's quickly look at the accrued income, how the accounting entries for accrued income, by looking at that another exercise to illustrate that. Okay, accrued income, like I told you, they are incomes that are due during the trading process but yet to be received for the current accounting year. Students should take note of that, and this is the format. Okay, so look at practice question 2. Mr. George received a commission from sales of goods, 10,500 naira, owing, take note, 750 as at 31st December 2013, and 1,500 was also owing as at 31st December 2014. You are required to prepare the commission received accounts, statement of profit or loss accounts, then statement of financial position. So you write commission received accounts, okay? Then the statement of profit or loss, I've shortened it. Then we have the statement of financial position, okay, in a shortened form. All right, is an extract, just part of it. That's what we need. Now, if you look at the formats very well, once again, look at the format. Okay, you will debit the previous balance. All right, will be debited. Then the cash you received during the year will be credited in the income accounts. All right, then the balance yet to be received for the current year will be debited. Will be credited. Then the balancing figure goes to the statement of profit or loss accounts as an income. Then you carry down your balance. So pause the video to study these formats. All right, so let's go back to the question. So from the question, Mr. George received a commission on sales of, that's the cash, sales of goods, that's 10,500 naira. So what do? When you received, you debit the cash accounts and credit the income accounts. Okay, that is 10,500. All right. Then the balance that was owing in the previous year, balance brought forward from the previous. All right, that is 7,500. Okay, you have been given. You can pause the video to read through this question, which is 750 for 2013. That's the previous year. Now for this current year, we will have you say balance carry forward, which is 1,500. Okay, then this is balance owing by our customer, 1,500. All right, class. Now, when you add this together, I think it will give you 12,000. Okay, we can use our calculator to confirm that. So this is 12,000. Then the balancing figure goes to the statement of profit or loss account. Students should study this. This is accounting process. All right, so the difference, okay, the difference, that is 12,000, all right, minus 750. So you pick up your calculator. What do you have? The difference is 11,250. Okay, then to go to the profit or loss account. All right. Okay, then you come under your income side. Income, take notes, that is the commission received, okay, which is how much? 11,250. That is the actual income meant for the year. And this income, you write it immediately after the gross profit. Supposing you have your gross profits here, gross profit, so that when you are preparing your final accounts, you have our gross profits, then immediately you write. So the addition of this becomes the total income. So I will still mention it when we get to final accounts, preparation of final accounts. All right. Now, in the balance sheet, it will appear under the current assets. Under the current assets. It will appear under the current assets. So, okay, you have your current assets, you'll be having your inventory. I'm just trying to plant a picture in you. Inventory, you have receivables, so you have prepayments. Okay, how much is the prepayment? That is 1,500. So all these, so that when you are preparing your statement of financial position, you know what to do. So this is just an extract. All right, so the question has been answered. Okay, class, let's look at, if you have any question, please, you can ask me from the Prodigy. Okay, if you have any question, any challenges concerning this, please do ask from the Prodigy. I'm ready to answer to welcome any question from you. All right, so in the next class, we are going to look at prepayments so that you understand this. I want you to replay this video, you understand. Then in the next class, I wanted to do it here before, but I just feel like moving the prepayments aspects to the next class so that you can understand this better. Okay, class, hope you understand. Don't forget, we started with meaning and types. That's year-end adjustments. We look at the types of year-end adjustments. Okay, all right. So if you have any question, we said please try to contact me on the Prodigy. I'm ready to answer you. We have bad debt, provision for bad debt. So in the next class, we are going to look at prepayments. Okay, before I give you the assignment, I'll give you the assignment in the next class. All right, but I want questions. Ask questions from the Prodigy. I'm ready to answer you. So thank you for your time. I remain Mr. Shesi George, your account teacher in Fielder College. Always remember to stay safe. Bye.